Good everyone, welcome back to our next edition of Econ Talks. Gareth, we've had some new numbers out in the construction sector showing that there are some, I guess, still generally not very upbeat trends in the construction market. That's almost putting it mildly. The likes of residential consents are still down on a year ago in the latest figures, picking up a bit in terms of month-to-month fluctuations, but still feeling like on the whole things are feeling a bit weak. I mean, you've still got house prices that are in a pretty limited position, generally still down on a year ago. House sales haven't picked up massively, so perhaps no surprise that the residential construction market isn't turning up quickly, despite the fact that interest rates are low.
Yeah, you look at those residential consent numbers, the sort of annual running total is held at around about 33 to 34,000 for the last 11 months now, since June last year. So pretty stable during that time. What is interesting when you look at that and you compare it to sort of confidence in the construction industry, since the middle to latter part of last year, those numbers have lifted significantly and remain at very positive and high levels. But that confidence not being matched by what has been happening with consents, and indeed what is happening, as you say, in the broader housing market, where sales, yes, they're up on a year ago, lending activity is up on a year ago, but price is still tracking sideways. The stock of dwellings or houses available to purchase still tracking sideways as well. And so you look at those conditions in tandem with, we know, much higher residential construction costs, obviously, through the pandemic, and while that growth rate hasn't continued to increase, the costs are not coming down. So the viability of going ahead with constructing a new home at the moment is still pretty difficult, given that sort of price relativity you've got between building a new home and buying an existing one. So yeah, overall, you take that all together. As you say, the latest month numbers a little bit more positive or less negative, but a lot of that was just driven by sort of month-to-month volatility in the apartment numbers and retirement unit numbers as well, both of which have generally been pretty weak throughout the last 18 months or so. So across all of that, yeah, you look at the trends and you go, it's not continuing to fall away, really. But there's certainly no signs of that upturn that many people have been talking about and hoping for in the industry over the last 6 to 9 months.
And that's a bit of a contrast, right, with the likes of where confidence in the sector is. People expect things to turn up a whole lot better. Consent's not necessarily tracking through quite as much. Also interesting to see the likes of, on the non-residential side of things, a little bit more activity by the looks of it, potentially in the last month or so, but a lot really hinging around the likes of public sector money. If government comes to the table with some investments, then hey, things might well be on in the non-res sector. Without that, though, just feels a bit hard to find a lot more of that momentum when people are a bit more cautious about their forward investments. We've done a lot of work the last couple of years. Again, just suggests maybe not a deep, deep hole, but a more continuing hole in the non-residential, that sort of commercial industrial space going forward, perhaps.
Yeah, when you look at those consent numbers for non-residential over the last couple of years, they peaked in mid-2023, and once you strip out building cost inflation, have been falling since then. The last few months, they've been a little bit up and down and showing signs of stabilising, but the driver of that downturn over the last 2 years, primarily public sector stuff. So the new government came in late 2023, and school building basically stopped in terms of projects there. There was a lot of uncertainty in the hospital building space as well. Now, we've seen in this year's budget that there is a bit more sort of certainty in funding coming through, both in terms of education, certainly around hospitals, as well as we push past some of the uncertainty generated by Dunedin Hospital, and more funding becoming available now for other projects, particularly in the likes of Whangarei, seeing it in Wellington and Nelson as well. So, like you say, more positive signs there. Another project scheduled to get underway late next year is the construction or extension of a major prison work in Canterbury as well. So all of that together suggests less negative times for the public sector work going forward. But private sector still under a bit of pressure, given the sort of economic conditions and the fact that in terms of your sort of non-residential construction, industrial and commercial work does tend to lag the economic cycle as well. And what we've seen with economic activity this year so far has been somewhat patchy. And so we would expect it to be a little bit longer yet before you start to see more positive signs coming through in terms of that public sector building work, particularly when you look at what vacancy rates are doing and what rents are doing across commercial, retail property. Those sort of indicators have not really started to turn yet, and not expected to start looking more positive until 2026. So yeah, still, I guess more of a contraction, tough times to come through in terms of non-residential building yet, despite the fact that in terms of some of those background indicators, on the public sector side, especially, just looking a little more positive going forward. But it will take time for that to translate through from intentions to actual work being done.
And that's the difficulty, right? Like, although some of the numbers, you sort of run a few trends through them, and actually some of the numbers are in the construction sector perhaps not going sort of hugely lower than where they already are. Definitely not feeling like they're picking up too much either. Those underlying trends pretty soft in a lot of areas. Still that building cost inflation. Not that it's like you say, it's not accelerating at the moment, but it's still there. You're not actually seeing anything get overall cheaper. All of that sort of creates just a bit more of a limited position, I guess, going forward, despite the fact that interest rates are coming down. It's not immediately geeing up this huge amount of activity through the sector. We'll continue to assess how all of that continues to run through the likes of residential construction, what sorts of houses and homes we're building, and what's coming through on the commercial and industrial side with the likes of non-residential consents on one of our future editions of Econ Talks.